Michelle Graves, your host on The Power of Money, and I'm honored to have you as a part of my world in this coming segment. With The Power of Money, as you know, we are interested in three things. First, that you get the necessary education so that you and your family will have the information to do well in these difficult times. The second thing I'm interested in is for you to be empowered to prosper. I want only the best for you, but you can't get that if you don't have the education and then the drive to make it happen. And the final thing, and perhaps the most important thing, is that you be energized, because life is more than a journey. Life is about living. And so I want you to learn these things and to be empowered and encouraged and energized. I'm Michelle Graves. Now here we go.
And here we go. I'm Michelle Graves, and welcome to today's segment of The Power of Money. And it's my honor, delight, privilege, as I tell you every week, to be a part of your world and to have you to be a part of my world. Today is going to be a little bit different because I don't have a guest for today's segment, but today's segment is very, very important because on today's segment, I'm answering questions that you sent me by email, text, and messenger on Facebook. And I've had a ton of questions about all kinds of subject matter. And so I thought I would glean through some of those questions because they're good questions. They're real questions about what you need to do. So today's segment is Help Me, Money Lady. And I am honored to be able to do just that, to provide you with some help, some insights, some strategies to get you through these times. And do not be deceived. The top 1% are having a great time making a pile of money, spending like there's no tomorrow. But there is a large and growing population, including retirees, millennials that are under 35, Generation Xers, and this new crop who are having a difficult time making ends meet, wondering how they're going to get through the day. So I thought I would devote this next segment right now to addressing some of the help me questions that I've gotten, and with the hope that you will be able to learn and perhaps look at your situation a little differently. It's not hopeless. It's not out of control, hopefully. And if it is out of control, I'm going to encourage you to go to YouTube to The Power of Money, Michelle Graves, and look under one of the segments. I've had Mr. West on, who is a bankruptcy specialist. He did 2 shows, excellent shows, on bankruptcy, if that is where you are. But a lot of you, it's not even about bankruptcy. It's about learning incredible discipline and self-control. And we live in a society that does not encourage discipline, and it certainly does not honor self-control. You know, just do what you want. But sorry, if you do what you want all the time, you're going to get what you don't want. So again, the purpose of today is to read some scenarios that were presented to me and to hear my recommendations. Now, before going into all of that, let me begin by saying point blank, whether you're single, whether you're divorced, whether you are widowed, whether you're married, your life is your business. When people say, I want to start a business, I said, well, you know what? You already have a business. When you're an adult and you're self-sustaining, then you're officially in business. Now, I can tell you, having been a business owner for the entirety of my life, I didn't do the corporate thing. Early on, I decided that was not a good fit for me 40-something years ago. and I chose to go into my own business as a business owner. But if you are, again, single, divorced, widowed, married, you have a business. It's called you and your family. And if you are heading up your family, then you are technically the president of your family-owned business, the CEO, Chief Executive Officer of your family-owned business. Hopefully, your mate, if you're married, is the COO, Chief Operating Officer, the person that keeps everything running while you are making decisions for your family. Now, I can tell you whether your family-owned business is successful or not based upon looking at what you have in savings, looking at how you've laid a foundation, hopefully with the support and cooperation of your spouse and your children. Oh, yes, I did say your children. Your children have a vested interest in that family business, because if you are successful, they will, in fact, be the direct benefactors through being able to go to college, being able to even have the necessary money to buy a home with your assistance, lots of things. And even with legacy, when you die, they will have something coming to them, which is the payback for the years that you ran a successful business. I want you to start looking at this and thinking about this a lot, because if you go out here willy-nilly doing everything, the outcome is not going to be good. I'm sorry, the majority of our society are not entertainers, highly paid entertainers, and they're not sports figures. Most people have to do something to make a livelihood. And why? Because without money coming in, your business is technically bankrupt. That's how it's sustained. In the real world of business, if you don't have clients and income coming in from resources, then you're out of business as well. So we're going to start with the family-owned business model today and talking about my response to the many requests for help. So again, today's segment is Help Me Money Lady, which I'm glad to do. Now, moving ahead, if you yourself have questions, you can always email me at mygraves@gmail.com. That's mygraves, Grav as in Victor ES, at Gmail. And again, I will try to give you my very best opinion. If you're a Facebook fan, you already know you can reach me with a point and click, and you can message me. And hopefully I can get back with you. I'm not as timely as I have been on Facebook, mainly because of time considerations. That's just not something I do every day. There's some people that do this every single day, and I just don't have that kind of time. But if you do want help and you feel you're at a crisis mode, or you just want information, you can take advantage of those two venues. And as I tell people, believe it or not, I do answer all my telephone calls. I really do. Why? It's not that my secretary can't, but I really do like to be able to say hello. And you can imagine the shock when people call and I said, "Hello, Michelle Graves." They were like, "Ah! Oh!" No, I'm not Oprah. I'm not in that league. I'm just a woman that's worked very hard, raised my kids, and am now at a point in my life where I can begin to sit back and look at things without all the pressure and stress that many of you are dealing with. So let's start with my first question, and it goes back to very simply a situation where a woman is a widow, a young widow. Her husband died, and they have a 2-year-old at the time of his death. It was not an expected death, like most deaths are when you're young. But it caught her by surprise. She was not prepared for the financial devastation that resulted from her husband's death. He was the primary wage earner of the family. She stayed at home and took care of their child, which is not atypical. When children are little, the ideal situation, if you have a family business, okay, is that you sit down and you work out how this needs to work out. Well, she did not look at how this would play out. One of the things that she did not have, unfortunately, is they did not have life insurance. So his death meant that she had to beg, borrow, steal, and liquidate from their limited assets. And then she had a 2-year-old. And so she asked me very directly, what could I have done differently, Ms. Graves, so that I would not be in the situation I'm in today? So I would like to respond to that question. And for those of you that are listening in, you can certainly give thought to it as well. Let me begin by saying, while I have never experienced what you have experienced, young lady, I must applaud you for your tenacity, for your courage to look a difficult situation in the face and not to have a nervous breakdown, and for your willingness to get answers. Because now the head of your family business is gone. So you, by default, are now the head of your family business, and you do have a child. So, first things being first, I would have to submit to you that while you can, and if you have the resources, I want you to get some life insurance for yourself. First thing, get some life insurance for yourself. And make sure you have life insurance on your child, because the child's policies are independent policies. Don't get a rider, just get a standalone policy for your child. And they're very, very inexpensive and very affordable. With you, I cannot deal with rates and premium requirements because I don't know. I do sell as a broker a lot of life insurance, and that's never going to change, because unless you know precisely the day and the hour that you're going to die and you have money to pay for it, because it's one thing to die, but it's not funny if you can't pay for it. Ask all the families that are passing plates and GoFundMe. That's the big thing now, which is, would you please go to my GoFundMe page and make a contribution? And I say to people, oh, no, shame, shame, shame. What happened here? Well, what happened is that life showed up unexpectedly, and now here you are. So I'm going to say those two things based upon what has happened to your husband. You now, as the CEO of your family, have an executive decision to make, and that executive decision is, we're going to do life insurance on me and on my child. Now, if you are not working at this point, and you may not be, then you have to begin to look at what resources are available to ensure that you can continue to survive. And you have to do a real matter-of-fact assessment of what kinds of resources did your husband have. If he worked, did he have insurance from his job? Did he have any kind of unused vacation time, unused sick leave time that would create money for your family? The most important thing for you right now is money. And that's why I said I applaud you for your courage, because to know that the love of your life is gone forever. And no, I don't believe in reincarnation. And no, I don't believe your husband's coming back as a goat or a frog or a tree blowing in the wind. I absolutely believe that the dead know nothing. And so it's now on you. and with your courage and your faith in God and knowing that you have to be a strong support for your child, then you can move forward. If you are able to get employment at this point, I would certainly consider getting employment. I would also, if you have a strong family system, I would reach out to my family. I don't think anyone would be surprised if you asked for some kind of assistance in the area of child care while you secured employment. Today, temporary employment is a good segue into something more permanent. There are many temporary placement agencies. I don't know what your skill sets are. I don't know what you are considering doing, but that is a venue. Many companies today do not direct hire because they don't know what they're getting themselves into. So they will use temporary agencies to provide segues into a permanent status. They get a chance to see how you work in that organization. And you get a chance to see whether you like them, because it does work two ways. So I'm going to say a temp route, and that's more practical to me than saying go and get a job. There are tons of job sites, but your immediate concern is income and how to get something that will leverage your skills. Now, if you choose not to do temp work, or if you do, I'm going to encourage you, if you do not have a college degree or any kind of advanced training, that you consider going back into the academic world. And it doesn't have to be in the traditional sense. There's high demand today for people that have computer skills, people that are into the nursing and geriatric industries. Those are booming because baby boomers are aging, the elderly need care, and those skills are globally transferable. And when I say that, there's nothing to say that you as a young woman with a 2-year-old are going to be in the United States forever. You may very well choose to live someplace else. And you have my plaudits if that's what you choose to do, and it's well thought out, and you do have some kind of a support system to facilitate that. One of the things that I've discovered over the years is when you live outside of the United States, you have a very different perspective about a lot of things. Things that you thought were so important in this country are not important at all in other countries. How they look at things is very different because everybody has their own culture, everybody has their own filtering, how they see a thing. And so, you know, you have those options. But I would have to say first and foremost to look at insurance. If you are, you have a home that has a mortgage on it and you do not think you can afford it, you are going to have to consider selling it. Now, I don't know how to recommend that happens other than don't do it by yourself, because that is a skill set for which licensed realtors have to help you. And you can certainly get an assessment as to what can be done. You don't want the house to go into foreclosure, which is an outcome of you not being able to make those mortgage payments. And the bank will take your house. I'm sorry, folks, if you don't believe it, but the bank is not in the business of grief counseling. The bank's in the business of getting their money. And so, young lady, if you cannot afford the house, then you should consider selling the house through a reputable dealer, realtor. And then if there is any kind of shortfall, that's something you probably need to negotiate with the bank early on, which means you may have to get an attorney to represent your interests to make sure that the bank does not assess you with a deficiency or shortfall and then come after you later. You don't want any of that kind of mess. But you do have an extenuating circumstance, meaning the death of the primary wage earner. And you do want to get out of this as quickly and as simply as possible. Now let me talk about the issue of simply, because I don't know where people get off thinking you can hire an attorney and they're going to fight for you. attorneys are hired guns, all of them, but it's the nature of their training, which is to assess the situation and try to resolve it in their client's best interests. That's always first and foremost for them. You have to make sure, given your emotional state, whether you want to engage in battles or whether you want to get this resolved as easily and as simply as possible. Remember, the bank wants their money. Something's better than nothing. And if they can get it without going through a whole bunch of gyrations, they're happy to do that. The realtor is there to help you. A good realtor is worth millions. I mean, I think they're the most underpaid people, next to school teachers, which are truly underpaid for what they do. But realtors are right there because they work like dogs to try to sell a home. And most of you are not aware that the commission they make is not what their take is. If it's a $10,000 commission, then their take is going to be $2,500. And that is because it gets carved out between the house, the other realtor, and the other realtor's house. So you think about that. You think about that when you say, well, I don't want to pay them that. Well, excuse me, you're running a business, your family-owned business. And a part of that is recognizing that expenses will be incurred, and you have to be willing to pay people to look out for your best interests. I'm sorry, even a church works on a tithe principle, which is bring your tithes and your offerings, that there may be meat, which is money. Okay, nothing happens without money. So, excuse me, please. So I say this not arrogantly, but just as a practical matter. You know, stop counting pennies when you're trying to get something done. Try to get the best you can get and then move on with your life. And so I want to just conclude again with that scenario. What's the takeaway for those of you that are watching? The takeaway is this: death never comes when you think it's a good time. Even if you're in your 80s and 90s, you never think it's a good time to die. But death does come. And so how do you prepare as a family-owned business for death? You prepare for the inevitability of death by, again, laying a strong foundation and making sure that all your I's are dotted and your T's are crossed. What does that mean? Identifying who's the head of the household. If it's a co-partnership and there's two, that's fine, but each person has strengths and weaknesses. One of you may be better at handling money. Another of you may be better at doing something else. But identification of roles. That's why I said the CEO and the COO, the Chief Executive Officer, the Chief Operating Officer. Somebody has to run this ship, okay, in the final analysis. Somebody has to do it in your family-owned business. And so what's the role of life insurance? The purpose of life insurance is to be prepared for the unexpected possibility of death. You want to make sure all those pieces are in place, okay? Just practical. The other thing is making sure you have accumulated an emergency fund, which should represent a minimum of 6 months of pre-tax income. That's money that's available for tough and unexpected situations. Hospitalization. Nobody likes to talk about hospital bills and the reality of what sickness can bring. If you get cancer, you could be looking at some staggering bills. You don't know what your insurance company will pay for in many instances, but the purpose of your emergency fund is to cover all unexpected contingencies that are also a part of life. Life is not predictable. I wish I could give you a script, but everyone's script is different. And so it's not predictable, and you have to plan for it. And that's what your emergency fund is for. How do you build an emergency fund? You build it every paycheck. Money goes into that account until you've accumulated enough money where you can breathe easy. Again, 6 to 12 months, depending upon your occupational class and what you're doing. I hope you all are listening to me because this is valuable information. It'll save you a lot of heartache. It'll save you a lot of pain, unnecessary, because again, you can make these things happen for yourself by laying a foundation for your family-owned business, okay? You want to be a solvent business. You want to make sure that all your stakeholders, which is you, your wife, or just you, or you, your wife, your children, or you and your children, whatever your family profile looks like, stakeholders, people that have a vested interest in the outcome of your decisions. You make bad decisions, everybody suffers in the business. They do. They suffer because they don't know, they don't have the stability. And we want the stability that comes from you as the CEO or the COO or both. Hope not, that's rough. Making good decisions. So in response to her, she's a young woman, a newly widowed 2-year-old child, stay-at-home mom, and now she's got life looking at her. And the tendency to fall apart and to grieve and to all the things that are a part of that process are going to have to be put on park, because now she has to move into the role of, I got to run this ship. I got to steer this ship. I have to learn to ask questions and get information. And I also have to learn to look to people who can help me, which is why she reached out to me. And I'm just going to say, in wrapping up that particular story, she's going to be okay. This is my assessment. She's going to get married again. She's going to get married because that's what happens with young people. They do this. Now, my hope and prayer is that the person that she marries while she's dating, she makes sure that all these things are in place and covered. You better look at him carefully and critically before entrusting your family business into this bigger family business. You better make sure that he has his ducks in a row and that you can count them. I mean, I'm not interested in a conversation about what you say. I'm interested in what you do. And young lady, you better be asking those, move away the fuzz that comes from love and begin to recognize, as Tina Turner said, what's love got to do with this? Because when you're running a business, it's not about love. It's about running your business successfully and reaching and achieving goals as a couple that will enable you to live life not without ups and downs, but with a steadfastness and a purpose that says, I understand what I'm doing and I'm willing to sacrifice now for the benefits later. So that's one inquiry I had. Now I'm going to deal with another inquiry that crossed my path. And this is common. Oh my gosh. Here is my situation. Okay. I'm 58 and divorced. My children are grown and living their lives. However, my parents are sick, and I'm the only one in the family who is without a mate. Therefore, the assumption is that I have all the time in the world to give. As a result, I have had to make decisions about my own life and how I want to live it and what I need to do. Can you please help me here? My parents live in a very, very expensive home that is paid for. It's worth over $300,000. I live with them most of the time, and they need help. I don't really need help. This is what she's saying here. I don't really need help. They need help. Can you make any recommendations? Wow. Is that a loaded gun? Do you all know how many people are currently dealing with the issue of their parents in their parents' health and sickness and well-being. I mean, it's overwhelming. And it's epidemic because for every sick parent that's out here who's over the age of 75, there are children involved in some way. And if they're honorable children, they're going to be very much involved. Now, it's a tough thing, madam, to look at your parents who you grew up remembering in control. Dad had a role, mom had a role, and everybody lived under that security blanket. And it is a security blanket. Why do I say that? Because she just told me they have a $300,000 home that's paid for. They must have been doing something right, okay? But having said this, now what? Well, the first thing I have to say, and it's too late to talk about long-term care insurance. Long-term care insurance is insurance that's specifically designed to cover individuals who cannot manage what we call activities of daily living because of their illness. It could be diabetes, it could be COPD, it could be heart problems, it could be stroke, it could be cancer, it could be so many things that happen to the human body as you age. Because a body's not like a car. I mean, when your alternator stops functioning, you just buy another one. When your heart stops functioning, you can talk about a heart replacement, but the probability is that that's not what's affordable, and that's not necessarily what's going to work. So, let me just say before responding to that question, if you are under the age of 75 and you have not considered a long-term care insurance policy for yourself, forget everybody else, for yourself, that will enable you to stay in your home, or if you have to go into a skilled facility, it will be a private facility. It will not be a facility that is open for people that are poor, okay? Now, that's if you're under 75. Over 75, nothing I can do for you. I'm so serious. Nothing I can really do for you. But I'm going to say this. In her parents' situation, they're both in their 80s. So they're too old to qualify for underwriting for long-term care insurance. But here's some things that need to be done. And I do mean need to be done like yesterday. My hope and my prayer is that we're not dealing with Alzheimer's. Why do I say that? Because Alzheimer's epidemic, okay? They used to call it old folks' disease. They used to call it dementia. Alzheimer's is a form of dementia. But it drags on and on and on and on and on. And at some point, you're not going to be able to take care of that person. Now, here's where it gets messy. Because I don't know how much money her parents have. They may not have much. They may be living off of Social Security and living in this fabulous home that's getting increasingly expensive. But if at some point they need to go into a facility, either or both, some things are going to happen, okay? Now, if they have a sizable bank account, sizable, then they can begin to spend it down to pay for their the fees associated with a facility. We call them skilled nursing facilities now. They used to call them nursing homes, but you know, times have changed, so pick up the language and the lingo. But let me just give you a number if you want to fall over on your face real quick. $12,000 a month right now as we speak for a person that has memory loss issues. $8,000 if they don't, and say they just need to be in an assisted care facility. You're looking at $6,000 or more a month for them to be able to live in an apartment where they don't have to worry about their health needs. They're not sick enough to go into skilled care. They're there. Typically, what happens in those situations is the house is going to have to be sold, and the proceeds from the house will be used to pay for their care. So, if you're looking for an inheritance and your parents didn't take care of that little piece of business, then you can kind of forget it, because it's very easy to go through money in a nursing facility. Real easy, like fast. So, in her particular case, she has to do some assessments. The first thing is she needs to have a complete evaluation of both parents' health status. And for the record, just because they're 80 does not mean they're stupid. They may not want to listen to anything you have to say. But now is the time, since you're the one that stepped to the table as their caregiver, to minimize stress in your life and also stress in their life. You need to have a complete medical done on them. You also need to see a competent estate planning attorney to make sure all the documents are in place properly, meaning, do they have all of their insurance in place if they die? Who are the beneficiaries? Where is the money? Who's named on the bank accounts? If he's her power of attorney and she's his power of attorney, and both of them die or become incompetent, who is the successor? These are all things that a good estate planning attorney can address. And I do say estate planning because it's like doctors. You can go to a generalist or you can go to a specialist. When you're dealing with these kind of issues, you want to go to a specialist. And usually they're certified as estate planning attorneys. So you want to consider that. You want to also make decisions now, not later, but now, as to who is going to really be able to care for them and attend to them in their home as long as they can. I'm a believer in independence, and I'm a believer in seniors living in their own homes for as long as they can, because it is a fact, and I hate to put it this way, I haven't seen a whole lot of happy, smiley seniors in long-term care facilities. I just haven't. And I do visit them because I stay on top in my industry. You don't want to reach a point where it's now forced upon you, which is dad takes a bad fall. Dad can't come home, so dad has to go into a facility for rehab. And under Medicare, if you don't improve, then they won't pay. You must improve. That is a critical condition of Medicare. I didn't say Medicaid. Medicaid is health insurance. It pays for long-term care for indigents. Indigents are poor people. The only way you can be on Medicaid, hear me, at 65 plus, is you can't have any money. So you have to spend it down to $2,000. It was worse. It was $1,500, now it's $2,000. And you say, you mean to tell me my money has to get spent down? Medicaid is for indigents. It's not for people that have money. People that have money pay for their own care until they run out of money, and then they're on Medicaid. Different scenario. I hope it never happens to you. Hope it never happens to your parents. But it's happening every day to thousands and thousands of people. In fact, in the state of Ohio, unless something is done, Medicaid for seniors is bankrupting the state of Ohio's budget, because it's a shared payment with the federal government, but truthfully, it's very, very, very prohibitive in terms of costs. So that's why they want you to liquidate and spend everything, because they can't afford it. And actually, without sounding completely callous, I do not feel it's the federal government's responsibility to take care of you when you're sick and aged. It becomes a family obligation, or if you thought better, purpose of insurance, which is proper risk management. Now, let me share a little tidbit with you, young lady. They cannot transfer that house into your name or anybody else's name to avoid the problems that result from Medicaid, meaning that spin down. There is a 5-year look back on all of those types of activities. It's illegal, it's viewed as fraudulent. There are penalties of which I'm not going to get into on this show, but let it suffice to say that this is where you need to have your good estate planning attorney get involved. And many of them are very conversant on Medicaid and the things that can be done to enable them to have money even after they sell their home, so that they will not be completely impoverished. One of the provisions with Medicaid is that if only one spouse has to go in, the other spouse can stay in the house. They don't put them out. They can stay in the house. But at the point the second spouse has to go in, and invariably it happens, then you already know or should anticipate what will happen at that time. Medicaid will put a lien on that house with that one spouse in the facility. They're still going to put a lien on the house while the other spouse is there. And all expenses are still going to be assessed at the time of the spouse who's in the nursing home if they should die. So there is an end game on this, and it's not necessarily a pretty game, but my advice to you is you are an honorable daughter. I need to say clap, clap, clap for you being willing to be a caregiver and to devote years of your life to being there for your parents. Even if it's not appreciated by your ring span of family members, trust me when I tell you, someone greater is looking down from heaven. And it's called depositing into your future. The Bible says you honor your father and your mother, that the days of your life will be long. And I know a lot of people that's like, I'm sorry, I didn't write the book. Don't get mad at me, okay? Don't throw rocks at me. I didn't write it. But I am saying to you that when I see what caregivers and children have to sacrifice and deal with, it's tough. It's tough watching your parents age. It's tough watching your parents get sick. It's even tougher when you lose them. So these are just some thoughts I have on your situation. Since you are that age, and I don't know if you're still working or if you're retired, but if you're living there, bank your money and get some long-term care insurance for yourself, because now you get to watch what happens when you don't have it. That's my response to my second inquiry that I pulled. My third inquiry is from a young couple. Both of them are college grads. They both have good jobs. They're making over $150 a year combined at 75 and 75. They don't have any children, and they would like to know, what are your recommendations for us to get rich? Oh, that's good. Don't you like young people? I do. You're in an age where you're making a pile of money. That's good. In America, that means that you have credit worth, which means that people want to loan you money so that they can take your money. That's how it works. Good credit means you're exposed to credit availability, which also means that you will begin the process of transferring your potential wealth to someone else. Why do I say potential wealth? Because if you're making $150,000 a year and you have no children, you have an opportunity truly to begin to learn how wealth is built. And wealth is built simply by not spending all the money that you make. That sounds sensible, reasonable, logical, but that's not the American marketing program. The American marketing program works like this. You need 2 cars. You better be new. You need a house, a big house. Then you need to furnish it. And you need to finance it because your money's starting to get thin. You need to do these things because you are living out the American dream, which, young people, I have something to tell you. That dream's soon to become an American nightmare. Yep, on that way. It's going to eat you. It's going to bite you in the butt. Here's what I would recommend. Okay? Number one, don't have children until you have money. Why? Because you can always have children. That is, I mean, in times past, they didn't have those options. You had families that had 14 kids, great-grandmother. Why? Because they didn't have options. They were poor, and they were always going to be poor. And the children were going to ensure that they were going to be poor. But mind you, children back then had a different role than children today. Children back then would be your workers. Remember, it's a family business. Everybody was on a farm. You needed people, bodies, to work your crops, to feed your animals, to provide the things that are necessary for the continuity of the family. This is why people had all these children. It wasn't a problem. Today, however, you're talking about spending $250,000 to educate one child. And I did 3, which is why I tell folks there's no way, unless you're making a whole bunch of money, that you're ever going to have any money as long as you're busily trying to feed those many mouths. And $150,000 with 2 people not working sounds real good. $150,000 with 2 people with 3 kids, daycare, clothing, all the accoutrements of success that you want your child to enjoy, vacations, tours. Oh my goodness gracious, you're going to be pressed. And so what are you going to do? You're going to get involved with credit. Because God, the kids need clothes from Sears and JCPenney and Kohl's, and I mean, I got to buy clothes. And I don't have enough money. But I got this piece of plastic, and the banker's sitting there saying, yum, 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 yum. Here comes another sucker, because that's what it is. Because now you've crossed into a place where you could accumulate wealth to where you're not going to ever have any wealth because your money's going to transfer via credit cards and lifestyle to somebody else who is not a stakeholder. Remember I talked about stakeholders in families? You, your husband, or you, your children, or all the above. These are people who have a vested income interest in your success. So I'm going to say to anybody out here who does not have children, plug it until you can afford it. And when I say afford it, lay a plan out, CEO and COO of your family, the 2 of you, and identify what's important. Make sure you have your life insurance. Make sure you have your emergency money. Make sure you have disability if you're still young and working. Disability is major. Make sure you take care of your disability. Make sure you leverage, if you're working for a company, the cafeteria plan that they make available to you to cover all these things on a tax benefited basis. Take advantage of all of that stuff. I'm so serious. The government is begging you to do it because they're not going to take care of you. And if you think Social Security is going to be around by the time you get my age, you got me stuck. No, it's not going to be around. I don't believe it. You're never going to make me believe it. Why? Because they're spending the money as we speak. So you have to take care of you and your wife or your husband, whatever. You got to take care of it. You got to take care of them. Got to handle your stuff wisely. And then after you've got these things together, then you can start talking about having children, which are a blessing and a greater blessing when you can afford them. And for those of you that say, I struggled and I raised them anyway, do you think the children are oblivious to watching you struggle and complain, oh, I hate my job? And then you're mad because they don't want to work. Well, they grew up here and you say, I hate my job. Oh, I can't stand these people. These things don't have to happen when you have the freedom to choose. That's what wealth really means. You now have the freedom to actualize and to choose what you want to do. So I'm going to say to you all, keys to wealth, I've already laid it out. Having a good foundation, having a good plan, having a budget that you adhere to. Vacations need to be prepaid, not financed, okay? I don't care what kind of vacation it is. You don't need to be financing a vacation when clearly you can't afford it. So learn the power of vacationing with each other at home and enjoying the simplicity and the beauty of knowing that you're with somebody that loves and cherishes and cares for you, and that has a future. Your plan is to grow old together, which is another thing I'm going to say because my time is wrapping up and winding down. Divorce is not an option when you are on the road to wealth. It is a fact. It is a fact. Don't take my word. Google what happens to people that are divorced, particularly if you're a female. Females have a tough time out here, okay? Your earning potential is not the same as your ex's is. Your bounce back potential is not the same. And yet you have acquired a taste for the better things. So how do you finance your divorce? Credit cards, doing stuff that cannot work and will not work. And this is what you do. And I'm saying to you that it's the beginning of the end. So I tell couples, don't even think about getting a divorce. Don't do it. Okay? Don't do it. Just make up your mind. And that's a part of the planning process while you're dating, that this is it. This is it. We have too many things that we have to pull together as a team, as a business. Do you know what happens to businesses that wind up blowing up because of stuff internally? The business usually goes out of business. The business is usually parceled off and sold to sharks. The bottom line is the business does not survive. Now that's in the business world. What do you think your alternatives are and options are for yourself? Well, I don't like him. Well, wait a minute. Wait a minute. You didn't know that when you were dating? Things didn't set alarms off when you were dating? Well, we really didn't date. Well, you know what? Then that's kind of like buying a car and you don't even know how to drive it. Okay? Dating is an opportunity to really ask those hard, tough questions. And frankly, in dating, it's also an opportunity, if you have good, wise parents, they're going to chime in on both sides. On both sides. They got an opinion about whether this is going to know. Because who knows you better than your parents? Okay, you don't want to hear that because, you don't know my parents. Oh, really? You're the product. I don't know them. I don't know you. But I'm saying to you, just like you made those vows and just like you said forever, divorce is not an option. Just say that to yourself. We may fight like cats and dogs and maybe we go to separate corners, but divorce is not an option. Now, I know what some social workers are going to say, which is, some people don't need to be married, period. Then fine, get a divorce and stay broke. Because you are going to stay broke. Particularly if you're female, like I said. It's going to be a tough road, a hard road, and you're not going to get it the way you thought you were going to get it. Now, I'm just being open with you. I'm not trying to be, stir up nothing. I know what I'm talking about. I'm a divorcee. And I'm going to tell you, just straight up, you try raising children. Oh my God. So low. And of course, we all do it because we have to. We're responsible. But it takes a toll. It takes a toll because your life now becomes their life. Your goals and dreams become their goals and dreams. And you have to put your stuff on park. For many of us, for years, because it takes time and commitment and money to raise children. And please don't give me this garbage about, oh, me and my ex are getting along fabulously. Who are you lying to? You're getting along with him because you have to. Because the politics are, I don't want him taking money from my kids. I don't want him getting married again because that's less money. We already know about you and your ex getting along together. Good. Just don't go down that road and avoid the drama and the trauma. Think carefully And finally, and I give this as an admonition to this couple that wrote me, if you can lay a foundation, if you can make a commitment to the success of your family-owned business, if you can begin to see what this is all about, if you're going to get a house, buy it cheap, pay it off quick, and move on, okay? You don't need a bigger house because that's a bigger bill. You need a house that you can enjoy and really gives you pleasure, okay? This whole acquisition thing, oh, I got to have a bigger. Why do you have to have a bigger house? Because I need more and more room. Oh, going to the park is not enough room to run around. Okay, you're tripping. But this one's going to cost you, because the world system does not care if you're in a huge house that you can't afford. That just means your family business is going down the tube. It doesn't care if you have cars that are killing you. You're driving cars that are taking you down the tube. That's your decision. You run your business like that, your business isn't going to make it. You use credit cards like you're a drunk man driving. Don't worry about it. The bank's not going to say, smack you on your hands. That's irresponsible. They're not going to say that. They're going to say, spend, because you're going to owe me till you die. And then you're going to owe me after you're dead, but I can't collect, unless your husband's on the account. Then I'll go after him, or I'll go after her. Sounds so callous and so matter of fact. And again, I've been criticized over the years. Miss Graves, do you have to cut it straight like that? And I'm like, I wish I could cut it even straighter, because I speak from the perspective of the dark side of the belly of the whale, which is you're in this and you don't know how to get out of this. And which is why you reached out to me today. And you said to me today, help me, Miss Graves! I'm drowning and I can't swim. I gave you 3 actual emails that came to me. I have lots more, but I only have a limited amount of time to talk to you about this today. So on that note, I will conclude today's segment of The Power of Money. Help me, Miss Graves. I don't know what to do. And let me just leave this final parting note with all of you that are faithful viewers over the years. God, I've been doing television since 1982. My goal is to give you the necessary information so that you can make good, sound financial decisions for you and your family business, and so that you may be empowered and energized to begin to lay a life that is glorious and unspeakable, where your life will be such an inspiration to others that they will want to do what you do. That's what I believe has to happen. I don't believe government has the answers. I believe that you do. And you set the stage for others, starting with your family and your children, to emulate and to follow you. I'm not talking about a gravesite burial where everybody says you're a great person and you die penniless with nothing. I'm talking about leaving a legacy that says that person is somebody really amazing and special. So on today's segment of The Power of Money, I sign off and I close off, and I wish you all only the very best. And you have a blessed and precious day. I'm Michelle Graves. Thank you for listening in on today's segment. You take care.